Welcome everybody back to Boost in Motion, guys. And today, this video is going to help you guys look for the cheapest interest rates and one of the best kept secrets for your car auto loans. But before I get into the video, guys, if you're part of the Boost in Motion channel, I know you guys have already hit the like button. So thank you guys for your support. And if you enjoyed this video, hopefully you hit a like button. Hopefully you comment below. But hopefully I earned your subscription. So thank you, and I appreciate your time. But guys, let's jump right into it. So in this article, it is from the Wall Street Journal, and it says auto loan interest rates are skyrocketing, but no one is telling credit unions. Guys, remember, credit unions are more of a privatized, smaller banks, and they're not really for them to compete with like the bigger banks, like just say Chase, Citibank, and the other ones. They usually try to offer interest rates that are a little bit cheaper, but in this last year of 2022, with interest rates continuing to increase because of the Fed fighting inflation, they still have to compete, and their interest rates are actually pretty lower, almost 2 basis points or a little bit more. In third quarter, credit unions charge about 5.94% on average for used cars, while below 8.36% of other banks. This is like almost the average what other banks were charging. The gap was the widest at least 5 years for new cars. Credit unions were charging about 4.43 versus banks that were charging about 6%. That's why on 1.5 basis points. This is insane. These are really good rates. To keep these rates low when the rest of the market just exploded, who trades credit unions auto loans ahead of the whole trading at Raymond James. Credit unions are not-for-profit cooperatives that are owned by their members and don't pay federal income taxes. In recent years, they have grown rapidly. In some of the corners of the consumer finance, they are going to toe-in-toe with banks. Their profit funnel back to members partly in form of lower borrowing cost. People are starting to flock to a lot of these credit unions. You have, I think, maybe Federal, Penn Fed. There's a lot of union banks, maybe locally in your county or city, that will offer you pretty good interest rates. The only thing I would say that I realize with these union banks is sometimes they don't offer as much money, or you have to build an account or a relationship with them to be able to qualify for these certain loans. Because it's like, yeah, we could give you a loan, but we want your banking. Like, they know that they make more money by you banking with them. So in some cases, you actually would have to make an account, and they have to maybe a certain time of maturity where they're like, all right, you've been with us for a while, we had your money, now we open the floodgates. Free lending credit unions could struggle in a recession that is expected next year. Americans might lose jobs and find themselves unable to pay their debts. Delinquency, subprime, auto loans, blah, 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 has been climbing briskly in the last recent months. Also, guys, remember, as I said, repossessions of vehicles have, first thing, in the last 2 to 3 years, the average auto loan went up historically. The most amount of car purchases went up historically. The average price of a new and used car went up historically. So now we also have, guess what? Historic downfalls. Car sales plummeted. Prices of vehicles at the auctions plummeted. Highest interest rates raising the fastest they ever have. Cars being repossessed, the most they ever had. Like, cars sitting on dealership lots, the most they ever had. So there is such a reflection and complete 180 of the market, and these are some of the things that are continuing to change the market. Okay, so at a friend's recommendation, he went with a Carolina's Cooperative Federal Credit Union, which offered 2.9% for 84-month loan, which is a really good rate, guys. He filled out as much of the paperwork by hand and mailed it in. He opened an account to become a member and eligible for the loan. Initially, he was able to use a credit card to make his loan payments and collect cash back rewards, though he said the credit union later started charging for that option. Mr. Honko said the rate is so low that he earns more interest from stowing cash in a high-yield savings account that currently is 3.3% than he pays in the interest on the auto loan. That's another thing I realize is so good about union banks. Their savings accounts usually give you a lot more money back or money back into the account because they're using your money for investments. So yeah, he might have to pay with a credit card, but this is also another way of like credit card churning. This is a whole nother thing I've been doing for years. Once again, I'm not like a finance channel, I'm a card channel, but I use a lot of credit cards so I can get that cash back, or I can get those points so I can use it towards flights and my PayPal account. Like there's always things or ways to take this points or money back or cash back and use it for other things in my life. So he's basically saying by him using his credit card, he gets those points. Then he has a high interest yield account, and not a lot of banks even yet to use your credit card to actually make car loan payments because they you can easily call the credit card company and say, hey, listen, this is fraudulent, and they will end up being screwed, So that's another thing. Credit card unions weren't as quick to jack up rates along with other lenders of Federal Reserve. Credit unions tend not to move in the lockstep with capital markets. What is more, some credit unions have refocused on auto lending now that there is a less demand for mortgages, according to William Hunt. Now, for me to move forward a little bit more, let me see if there's any more information I could share. Credit unions now have a bigger share of auto finance market than any other type of lender. In the third quarter, they held 20% of all the auto financing, up to 20% a year earlier. Some of these largest credit unions have added billions of dollars worth of auto loans to their books this year. Schools Federal Credit Union grew the total of 29%. Navy Federal Credit Union auto loans rose 13%, and Golden One Credit Unions climbed an 18%. So this may also be another thing I think is pretty crucial because these banks offer smaller rates or pretty much cheaper rates. People are more able to afford these cars. Not saying that they're still approving cars that people may necessarily not cannot be afford because may not be able to afford because what banks have realized is now they really want people to be able to qualify for these auto loans. So as much as they may want you to get in a car, the LTV of a car or loan to value of a car has went down so much that if you want to go get a car today in December, they will ask for bank statements, they'll ask for pay stubs, and they're also gonna look at the prices of the cars at auction, and they'll ask for more money down, so that it's pretty much like a keepsake. Like, all right, like the car might be $50,000, and they might be like, you got good credit, we give you a good interest rate, but the LTV for this car the auction might be about 45,000. They might sit there and say, hey, we might need like $8,000 to $9,000 down. This is a way for them to protect themselves just in case they need to repossess the car in 2-3 months, that they could still go to auction and possibly sell it for 45,000, but you already put $10,000 down on a $50,000 car, so they could still recoup their money and thus more. You know what I'm saying? So that's what these guys are definitely doing. Credit unions that find they have to sell auto loans to free up space on their balance sheet would likely take a loss. That is because the interest rates on loans are so far below going rates, said that the credit unions are finding the auto loans that traded 101 to 102% on dollar at the beginning of the year are now trading for 95 to 96 cents. Like what I told you guys, the cars are a lot more cheaper, so they can't take as much risk. And lastly, I'll just end it here by sitting there saying it like this. Bear with me, guys. Bear with me, because I'm using a new program now. What I want to say is this, guys. In all actuality, right? We're gonna continue to look to purchase the car soon. Let's be honest with you. We're going to continue to look to purchase cars soon, especially in 2023. And as I told people in the market that's been following me, because people are Infiniti, Nissan guys, but there's some people follow me, Mercedes, BMW guys, and maybe some people follow me with even more high-end cars. Because the car market has pretty much did a complete 180 in 2022, all of quarter three, quarter four. Quarter one of 2023 my prediction may jump up a little bit because people may get their tax money back. There might be a little bit of fluff moving around, but the thing is, when new buyers come back, the prices have come down already. It may stabilize a little bit because people will be buying cars again and trading in cars because there's so much of influx of new cars and used cars now. The market will still bounce around a little bit, but the thing is, prices are still going down regardless. I've been seeing it, and I put videos on my channel talking about just the December report of maybe a couple of models like an M3, a Q50, or a G37. The prices have made some crucial changes within just the last quarter of this year. So continue to patiently wait. wait. And if you know that you don't need to get a car yet, don't go do it. But if you know that you've been watching this car for about 60 to 90 days and excuse me guys, you've been watching the car for 60 90 days and you've been seeing the price come down more and more and more, it might be that time to send that email or give that call or actually go in person to that dealership if you can and say, listen, I'm really interested in getting this car, and I'm trading this car, or I would like to purchase it. This is my credit score, or I want to pay cash, whatever, and work out a deal. These dealerships want to get rid of the cars. But then lastly, I just want to leave with this last point. Some dealerships are also over their head. They're screwed because let's say they paid $50,000 for a car now and the market went down, let's say 15%. So that car now should technically be about $42,000. But guess what? Guess what? They don't want to sell the car at a loss. So they might just hoping and praying somebody might walk in and buy the car for 49 or 48. Well, you might be that guy. Or they may not be willing to negotiate, so go to someone else. So outside of guys, you have a good morning, good afternoon, good night. Thank you, I appreciate it. I'm definitely trying a different viewing point for the camera. Also different quality. Because I'm using a different program. So things are going to be a little bit different. But I do appreciate you guys continue to show your support. Hopefully hit the subscribe button with the bell notification. And my Boosting Motion family, I know you guys have already been banging with me watching those ads and hitting that like button too. So I really appreciate it. So guys, you already know what to do. You have good morning, good afternoon, good night. There's no outro. I'm still learning this software. So guys, I appreciate it. You guys have a good day. Thank you.